Coming up on the show today, World Bank approves $1 billion funding to support Kenya's budget. Egypt to provide $6 billion in loan guarantees to aid businesses. And South Africa's manufacturing output slows to 2.1% year-on-year in February. Hello and welcome to Business Incorporated. I am Bisi Adebayo. Well, let's begin the show with intraday market numbers in Africa, which were mostly negative at intraday, except for the NSE, which rose 0.17%. Elsewhere in South Africa, the JSE lost marginally by 0.04%. Egypt's EGX30 shed 1.48%, while Kenya closed positive on Tuesday. And elsewhere in the Gulf region, major markets were all positive at intraday, with the Abu Dhabi index gaining the most by 1.39%, while Dubai's index added 0.12%. The Qatari index rose 0.61%, while Saudi Arabia's index added 0.08%. And in Europe, stocks slid into negative territory today as positive global market sentiment falters. Well, let's bring in Chelsea Delany at the Frankfurt Stock Exchange for more from the European scene. Good afternoon, Chelsea. It's good to see you. So Deutsche Bank held its annual meeting with shareholders today as the coronavirus-induced economic slowdown threatens to derail the struggling bank's restructuring efforts. What did investors make of the bank's strategy for getting through the crisis?
Well, Deutsche Bank's message today was really one of confidence and optimism. Investors do seem to be accepting that at this point. The stock has risen about 2%, even after Deutsche Bank said it wasn't going to be paying a dividend to shareholders this year. But Deutsche Bank is obviously really going to be struggling over the next several quarters as it faces a lot of its customers not being able to pay back their loans or debts. This is really going to be the key problem for most of the banking sector is these loans going bad and loan defaults. So Deutsche Bank has already set aside about 500 million euros. They probably will have to set aside more money in case its customers can't pay back their debt. But they are saying that the strategy that they've put in place since last July, this massive restructuring that they're working through, is starting to bear fruit. So they are on track for their cost cuts. They say the businesses that they're really focusing on, things like corporate banking and retail banking, are doing quite well right now, especially as its customers need a lot of support and need help raising funds to get through the crisis. So they have made a lot of progress, and for now investors do seem to be satisfied with that.
Now, a new report on European consumer confidence for the month of May will be released later today. After a record decline in April, are consumers feeling more optimistic now that economies are actually reopening?
That's the forecast. That this data is expected to show a slight improvement in European consumer confidence in May after really a brutal and unprecedented decline in April. And this wouldn't be totally a surprise, especially since April included really the most severe lockdown measures in Europe. In May, we've seen a lot of those start to lift here in Germany. A lot of businesses and restaurants and things like that are now reopened. So there is a vision of normality back in sight for a lot of economies. But the consumer confidence is very crucial for the economy going forward because consumer spending is a huge part of economic growth. So how consumers are feeling, how willing they are to spend money is really going to determine the path for the European economic recovery.
Volkswagen says it has paid 9 million euros to settle market manipulation charges against two top executives over its diesel engine cheating scandal. After 5 years of legal turmoil, is Dieselgate finally in the rear view for the German automaker?
It is not, and it may really never be. Volkswagen has really been settling a lot of claims over the past few years. They just recently settled a class action suit in Germany. They've settled class action suits in the United States, but it's sort of like whack-a-mole. As soon as they settle one, another one pops back up. So they are still facing court cases really all over the world. And while this is quite important because it involved the chief executive and another top executive at the company, it will continue for a long time for Volkswagen to be fighting these claims. And now they also have the added challenge of this coronavirus spurred devastation in the auto market, as well as the shift to electric vehicles that's consuming a lot of cash and a lot of attention for the company. So they still have a lot of challenges ahead.
Ms. Chelsea, we'll see you again tomorrow. In the UK, inflation tumbled to its lowest level in 4 years in April. Let's bring in Juliana Olayinka at our London studio to give us details of this and more. Good afternoon, Juliana. So we'll begin with data released by the Office for the National Statistics, which shows that Britain's inflation keeps falling despite the COVID-19 pandemic and the lockdowns. What is driving the decline and how are the markets reacting to this?
Good afternoon, Bissy. Yes, the inflation is falling. The Bank of England has set an inflation target of about 2% here in the UK. In March, it was 1.6%. In April, it's fallen to 0.8%. And of course, coronavirus is a major driving force behind that. Global oil prices have fallen, which means that how much people are paying for petrol in the pump is relatively cheaper than it was a while ago. In some places, it's £1 per litre here in the UK. Clothing is also a major driver. A lot of retailers are having to push down prices to get rid of their stock because their stores are closed. There was some suggestions by the Bank of England Governor Andrew Bailey that inflation could fall below 1% in Britain this year, but he had hoped that that would be much later in 2020, but of course it's happened now. However, there were some economists that did project that this would be the rate of inflation. So for some consumers at the moment, it's a good time to be buying in the UK, but a lot of people are locked up, so they're not taking advantage of the lower prices here in the UK. The FTSE did actually start off with a bang. It's still in positive territory at intraday, but slightly lower at the announcement of the inflation data. The all-share is up 0.13%. The FTSE 100 is up by 0.14%, and the FTSE 250 is up by 0.17%. In currencies, the pound also up on the US dollar by 0.12%, though down on the euro by 0.21%, and down on the Japanese yen slightly by 0.02%.
Now, the government has released details of the tariffs Britain will impose from the start of next year, but businesses have warned Boris Johnson that he must clinch a free trade deal with the EU. What does the new tariffs say, and who are mainly the beneficiaries?
Well, the UK global tariff, as it's called, that was announced by the Secretary Liz Truss on Tuesday. And really, it's just an insight of how Britain's trading relationships with the rest of the world will look at the end of the EU transition period in January 2021. So far, at the moment, there are about 47 no-tariff trade deals that the UK has with several countries around the world. And in this new global Britain age, which the Prime Minister is hoping he can achieve once he's departed the EU, he wants that to increase. So at the moment, it's about 47% of the world. He wants to increase that to 67%. So if no countries have a preferential trade deal with Britain by the end of the year, then there will be a 10% increase. This is mainly affecting the agricultural industry. It's also going to affect the car industry. So any cars and agriculture coming into the UK at the end of the year, there will be a 10% increase. There have been concerns from the agricultural industry and the car industry, although Britain does insist that this is to protect those sectors. Of course, during the whole Brexit debate, there's a lot of discussion about cheap meat and chlorinated chicken. I can't get that out. Chlorinated chicken coming into the UK from America. The fact that the UK are now going to put a 10% increase will potentially stop any cheap produce coming into the UK. And of course, what Britain are trying to say to the rest of the world is that if they're not in the customs union, so there isn't that blanket amount that they have to place on tariffs coming into the UK, then they want to expand their relationships with other countries by reducing the tariffs that they'll be paying, and therefore any produce that Britain is exporting out of here into those countries will also be cheaper still. on the Brexit scenario. The discussions are already pretty tense between David Frost, the chief negotiator here, and Michel Barnier, the chief negotiator in Europe. They seem to have stalled at the moment. Will there be a no-deal Brexit? We're not sure, but it seems as if we may potentially be heading into that way. But whether or not we are, the UK is looking further afield from the EU and trying to secure some no trade deals with the rest of the world.
In corporate news, Juliana, EasyJet has admitted that a highly sophisticated cyber attack has affected approximately 9 million customers. And EasyJet became aware of this attack since January. Why are they coming public now, 4 months after? And what would this mean for the airline?
Well, it's an interesting question as to why they would wait 4 months. I suspect that that's because new information has been released about the potential hacking. There are a lot of suggestions, and I believe this first appeared from the Reuters news agency, that China may indeed be behind the attack. There has been no comments yet from the Chinese embassy here in Britain, and there's been no official statement from Beijing. But there are sources that suggest that the information and the style in which these hackers used to get into EasyJet's accounts has been used many other times, and a lot of these hacking systems have been traced back to China. And yes, 9 million customers' details were taken, as well as about 2,000 credit card details. EasyJet said in a statement yesterday that they would be contacting any customers that had been affected by this. So, of course, there are lots of worries. Why would hackers want this information? Well, you know, looking at who goes where at what time is really important. It's good counter information for security agencies. So there are concerns and worries, but it is a 4-month-old story. But nevertheless, there are loads of people who are concerned about their data. And this is just another example of data protection being breached.
Many thanks, Juliana. We'll see you again tomorrow.
Thank you.
And stocks in Asia Pacific were mixed today as China's benchmark lending rate was left unchanged. In Japan, the Nikkei 225 rose 0.79% to close at 20,595.15, while the Topix index gained 0.58% to end its trading day at 1,494.69. South Korea's Kospi ended its trading day 0.46% higher at 1,989.64, while Hong Kong's Hang Seng Index dipped 0.1% as at its final hour of trading. Mainland China's stocks edged lower also, with the Shanghai Composite 0.51% lower, around 2,883.7, and the Shenzhen Component lost 0.94% to 10,948.48. In Australia, the ASX 200 gained 0.24%, closing at 5,573. And U.S. stock futures pointed to solid gains today following a weak session that snapped a 3-day winning streak for markets. Dow Jones futures implied an opening gain of more than 250 points. The futures contracts for the S&P 500 and Nasdaq also pointed to a positive open. On Tuesday, stocks traded most of the day around the flat line until a report raised concerns about previously publicized trial results for Moderna's potential coronavirus vaccine. Oil prices also rose earlier today amid signs of improving demand and a drawdown in U.S. crude inventories, but worries over the economic fallout from the coronavirus pandemic capped gains. Brent crude futures for July delivery were up 1.27% at $35.11 a barrel, while U.S. WTI crude futures for July were up 0.56% at $32.14 a barrel. Oil prices have mainly risen during the past 3 weeks, with both benchmarks climbing above $30 for the first time in more than a month on Monday, supported by massive output cuts by major oil-producing countries and signs of improving demand. Still to come on the program, World Bank approves $1 billion to support Kenya's budget. Please stay with us. Welcome back. The World Bank has approved a $1 billion loan for Kenya to support its budget. The COVID-19 pandemic has caused the government's budget deficit to swell to 8.2% of GDP in the financial year to the end of June, mainly due to reduced tax collection and foregone revenue in the form of VAT and income tax cuts. The loan comes 2 weeks after the IMF approved $739 million in emergency financing to help Kenya respond to the economic shock caused by the pandemic, a move which has supported the shilling currency. The World Bank expects growth to fall to 1.5% this year from 5.4% last year due to the pandemic, but the government has a higher forecast of between 2.5% and 3%. Egypt's central bank will provide up to $6.36 billion in loan guarantees to banks to encourage lending to businesses during the coronavirus crisis. According to the central bank governor, the decision comes during increased business risk in the market, especially with regards to companies and finance. The loans will carry an interest rate of 8%, below the central bank's key overnight lending rate of 10.25%. The coronavirus pandemic has wreaked havoc on Egypt's economy, particularly with the virtual shutdown since the country's tourism industry, which represents about 5% of GDP, and the closure of restaurants and cafes. We have more stories from Egypt now. The government has extended a hold to all international passenger flights to curb the spread of the coronavirus. Egypt's Prime Minister says the extension of flights will continue until further notice. Flights at Egyptian airports were first suspended on March the 19th. In South Africa's manufacturing output fell 2.1% year-on-year in February after contracting by a revised 1.8% in January. Data from the Statistics Agency shows that on a month-on-month basis, factory production was down 2.3% in February and declined 2.2% in the 3 months to the end of February. South Africa's Parliamentary Committee on Public Accounts has given South African Airways Businesses Rescue Practitioners 25 days to produce a business rescue plan for the troubled airline. They had submitted a proposal to terminate contracts after government refused to pump any more cash into the ailing airline, but the Labour Court ruled last week that the retrenchment process should be halted. The committee is also accusing them of wasting taxpayers' money running into billions of rand. Meanwhile, the National Union of Metal Workers of South Africa, the South African Airways Pilots Association, and the South African Cabin Crew Association have presented their own plan to salvage the situation.
The National Union of Metal Workers of South Africa, together with the South African Cabin Crew Association and the SAA Pilots Association, are jointly deeply disturbed by the fact that the executives and the most senior management at SAA refuse to cut their salaries, particularly for this period of May and June, in order to save the airline. As the biggest unions at SAA, we have been willing to reduce our salaries by as much as 49%. We negotiated this with our members, but the highest paying executives refuse to, and they remain on full pay. Secondly, as the biggest unions in SAA, we are deeply concerned by the business rescue practitioners who have made it very clear that they are not interested in developing a business rescue plan for SAA. They confirmed this in their engagements with Scopa on Friday. They made it clear that their vision is a winding down of SAA and the stripping of its assets. We condemn this in the strongest terms. This is in violation of a memorandum of agreement or memorandum of understanding which they signed with DPE in May, where they claimed that they were going to work with us on a turnaround strategy for the airline. So they have reneged on that.
In other news now, Senegalese dairy company Dolima saw a slowing down of its business because of the COVID-19 lockdown, but the subsidiary is seeing a lifeline selling fruit, vegetables and cooked meats for home deliveries. Demand have more than doubled last month, and Club Kosam now employs an extra 25 people and is building a new refrigeration unit in Dakar. Let's see this report.
Since the coronavirus reached Senegal, a growing number of residents in the capital have begun ordering groceries online, a welcome boost to a fledgling delivery service in a country where produce is usually bought in shops or markets. Club Kosam now delivers milk products, vegetables, fruit and meat to 1,300 households in Dakar per week, with monthly sales doubling since the start of the epidemic. The rapid uptake of deliveries from Club Kosam, a subsidiary of Senegalese dairy company, the Shepherd's Dairy, has offered a lifeline not only to the parent company but also local suppliers hard hit by the outbreak.
We learned that all of a sudden, a lot of people requested to have groceries delivered at home, which is one of the consequences of this pandemic. And it is a really good thing for the company. But I say they should not take their already existing customers for granted and continue to improve on their service.
The delivery firm sped up a planned expansion of its services in March when normal shopping was disrupted by a dusk to dawn curfew, limits to public transport, and the closure of open-air markets to combat the virus. Its decision to offer weekly deliveries of vegetables and fruit, in addition to the daily products it had sold since 2016, was a game changer for the business.
We contribute to most of the yogurt demand. It has increased, but you know, part of the target population has left. A large part of the expatriate community left the country, so there are pluses and minuses. Overall, we are okay with our yogurt at Club Kosam, but with the vegetables, it's clear that the demand has exploded. It almost did not exist before, and they wanted to respond to a specific problem, the crisis.
Since the start of the pandemic, we have doubled our deliveries. We do 1,300 deliveries per week. We were not doing that much at the start, so we are growing. But the pandemic sped everything up.
To the outbreak, businesses are moving online, while Senegal's Trade Ministry is helping by fast-tracking e-commerce policies and reforms, and also has created a platform grouping e-commerce sites online to ease access. Club Kosam's customers can now order their weekly basket of groceries that include a wide range of products, whilst limiting their contact with other customers in a country where social distancing has proved difficult.
Donc là, je sais que lui vient, je sais qu'ils ont pris...
They have really reassured us. They sent us emails to explain the safety measures they take. So I prefer that to going to the shop downstairs where I could be in contact with someone just to buy a bottle of milk. Like this, I feel better.
Donc ça me rassure plus que de me dire que je vais...
With the pandemic, Club Kosam has seen its sales double from an average 30 million CFA francs per month to 62 million CFA francs, and has recruited 25 new employees due to the surge in demand.
Let's wind down with gold prices, which gained in early trade today as big data from major economies reflected the fallout from the coronavirus crisis, while the initial euphoria over a potential COVID-19 vaccine fizzled and gave way to safe haven demand. Spot gold was up 0.2% to $1,747.19 an ounce, while U.S. gold futures rose 0.4% to $1,753.30. Elsewhere, palladium fell 0.8% to $2,043.63 an ounce, and silver eased 0.5% to $17.49, while platinum rose 0.2% to $834.05. And that's our show today. Thank you for watching. I am Bisi Adebayo.